Alright, so hello guys. Today I want to talk about the stock of the Initiates PLC, also known as the TIP. But before we continue, my name is Paul and I teach how to invest in this channel. Make sure to subscribe to my channel. Alright, so the Initiates PLC is a company that is actually making more money now that, more than they were before. So we look at the revenue, which is the money the company makes from selling its own goods or services. We can see that they actually had a very big growth. So in 2022, the company made about 448 million naira. So in 2021, it dropped to about 333 million naira. So in 2022, it grew to about 841 million naira. So in 2023, it became about 1.8 billion naira. Then in 2024, it jumped to about 4.6 billion naira. This shows that the company is growing very, very fast. So the sales are like increasing every year, especially from that 2022 to 2024. So this is a very, very good sign that this company is doing well. Now, another thing I want to talk about is their profit. All right. So profit is the money that remains after the company pays all its bills. All right, like all the money they are owing. So in 2020, the company made a loss. All right, that means it did not make profit. So it lost about 83 million naira. So in 2021 again, it also made a loss of about 77 million naira. So in 2022, it still made a loss of about 53 million naira. But in 2023, something changed. All right, the company made a profit of about 348 million naira, which is very, very massive. Then in 2024, the profit became very, very big, about 1.37 billion naira. Now, this is a very strong improvement. So what this means is that the company moved from losing money to making very, very huge profit. And this is exactly what investors want. Investors like to see this kind of, turnaround. And then when they see things like this, they are like, okay, I'm going to invest in this. Let us now look at, their assets. Now, assets are everything the company owns, like buildings, machines, like the cash and investments. So in 2020, total assets were about 1.40 billion naira. So in 2021, it increased to around 1.79 billion naira. So in 2022, it became about 2.0.9 billion naira. So in 2023, it increased to about 2.55 billion naira. So in 2024, it jumped to about 5.12 billion naira. This is a very, very big growth. So it means the company is expanding. It is buying more equipment and holding more money. So this is actually a very, very good thing for this company and also for those that want to invest. So property, plant and equipment, they also increased from about 855 million naira in 2020 to about 1.93 billion naira in 2024. So that means the company is investing in its operations. This can also help it to make more money, in the future. All right, so now let us also take a look at the equity. Now, equity, this is the real value that belongs to, owners or shareholders. All right. So in 2020, equity was about 843 million naira. So in 2021, it's reduced to about 766 million naira. So in 2020, it dropped to about 712 million naira. But in 2023, so it increased to around 1.17 billion naira. So in 2024, again, it rose to about 2.47 billion naira. So this is very, very good. So it means shareholders' value is actually growing. So I mean, it means the values of the shareholders, are actually growing. So retained earnings is also very important. So retained earnings is the profit the company keeps. So after paying expenses. So in 2022, retained earnings was, like really negative. So that means losses were actually bigger than profits before. All right. But by 2024, retained earnings became about 1.7 billion naira. That shows strong recovery. So the company was actually recovering and good management also and good management performance. Now, another thing we want to look at is the liabilities. So when we say liability, these are debts. All right. In 2024, total liabilities were around 2.64 billion naira. All right. The company has both long-term debt and also short-term debt. So the total assets are 12 billion naira, and total equity is about 2.47 billion naira. So this means the company has more assets than debt. All right, that is good. It means it can cover its or its obligations. So another thing we should look at is earnings per share. All right. So when we say earning per share, it tells us how much profit each share is making. So in 2022, it was around 5 kobo. So in 2021, it was negative. That's about 9 kobo. So in 2022, negative 6 kobo. In 2023, it improved to 39 kobo. So in 2024, it just jumped to 155 kobo. So this is a very, very strong increase. Investors like to see, earnings per share growing because it means their investment is producing, more, profit. All right, so another thing I want to talk about is net assets per share also increased from 95 kobo in 2020 to 278 kobo in 2024. Very big. This means each share now represents more value than before. All right, so if we think about the stock, we can also say, something important. We can say some important things. So first thing is the company was struggling some years ago. All right, it was making losses, but from around 2023 and 2024, so it turned around and started making a very, very strong profit. And secondly, the revenue is growing very, very fast. All right, third, assets and equity are increasing strongly. Fourth earnings per share is actually growing. However, we must also be careful. All right, the company's liabilities have also increased. We should know that. All right, the current liabilities in 2024 are about 2.03 billion naira. All right, that is higher than the way it was before. So the company must manage its debt, all right, carefully. If it continues to grow profit, then the debt will not be a big problem. All right, but if profit falls, debt can become very, very risky, and then investors will begin to think twice before making their choices. Now, looking at the fourth quarter of 2025, revenue from contracts with customers is about 6.31 billion naira for that quarter, compared to 2 billion naira in the same quarter of 2024. That is more than triple. All right, this shows that growth is still continuing into the year 2025. All right, this is very, very positive. All right, now from all these numbers, the company to me looks like a growth stock. All right, before it was very, very weak. I mean, it was always losing money, but now it is actually becoming very, very strong, and it is making more money than it was making before. Or it's actually keeping more profit and also building more assets. So for investors like you and I, this can mean opportunity, but investors should still check, all right, the share price in the market and compare it with earnings in order to know if it's cheap or very, very expensive. All right, so you have to make sure you check the share price. Okay, so that's it. So the Initiative PLC was, down before, but now it's getting healthier and stronger. All right, so it's actually making more money, and then it's also giving more value to shareholders and expanding its business. All right. So if the now if the company continues this way, the stock may continue to do well. But as always, investment has risk, and people should study well before they buy anything. So before you buy anything, always make sure to do your own due diligence. So if you are somebody who has actually enjoyed this video, make sure to like this video, share, subscribe. Remember, always do your due diligence before you buy any stock. Thank you for watching this video, and I will see you again in the next video.